is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. Early edition. This is 8:06 a.m. on a Friday the 20th of June. And we're looking at the Dow futures that were down 100 and something points overnight and then down about 60, are now up 49, some positive Iranian news. So the YM futures are up 54 at 42,566. That's the Dow futures. The E-mini futures flipped from negative to positive 8 points at 6,042. The NQ, which is the NASDAQ futures, trading up 43 at 21,989. And I'm going to go to the RTY, which is the Russell 2000 futures. This is the continuous contract, and it's at 2149, up 20. I want to also go to the gold. Gold was down sharply earlier on. It's now down 43. Back underneath that Chapman wave inside track repellent zone after making peak D. Remember, peak D in the Chapman wave is where other things can happen. That's exactly what we've got here. But silver's now following gold. Look, silver is down 91 cents at 35, let's call it 36, after peak F. This means that it's probably going to have a consolidation here. 35 will be key support. Let's see how that holds over the coming few days. I am looking at the bonds, and the bonds right now are down 20, 30 seconds. They are already struggling. So yields are moving up a little bit. So bonds are at 113 and 20, 30 seconds. High-grade copper. High-grade copper was trying to rally a little earlier on, but now it's down. But it's not a bad chart formation right here. It means that it's holding well. It hasn't broken out, but it has held well sideways at 4.85. I do want to get to the dollar, the DXY, the dollar. We got out of the dollar. We were in it for about 8 years, had very nice gains, but I decided that the Trump administration back in the first administration had mentioned over and over that they wanted a lower dollar so that our exports would be bought at a lower price. And I think that that's what they're getting. And therefore, I thought, what's the point of wasting money just sitting there? So we're out the dollar for quite a while now, but we had been in it for 8 years. And it's just kind of stuck. And I think that that's the administration's admonition of having a higher dollar. And also, in terms of interest rates, this is going to be very interesting for the next month and a half, going into the end of July to see what happens. EUR USD, that is the yen, trading right now up a little, up just a fraction at 1.151. But it made a peak. It's just kind of stalling. The weekly chart looks really good. Monthly chart looks good, but it's just kind of stalling right here. And the USD JPY, and this is the first time that you've had the yen and the dollar going opposite directions. Usually they go not in the same proportion, but they go in the same direction. And here, what did I just say? That was the euro. Euro goes in the opposite direction, usually of the dollar, which it's doing. And now what we got is the yen, USD JPY, US dollar, Japanese yen currency. This is the pattern that I was looking at a moment ago, and it's going slightly above, walking the 9-period moving average while the dollar is actually struggling. Let me just show you again. Look at the dollar. Look at the left side chart. The dollar is trying to rally, but it's really stalling here at 98.71, down 17 ticks. It's got a long way to go to get to cross positive, but there's a chance in this particular phase, since I am looking at a very strong chance that we're going to be seeing the patterns, and this is what I'm going to talk about right now. Let's go to the Dow cash. The Dow cash closed at 42,171 on Wednesday. Thursday was a holiday, and there was trading overseas in the futures, and the futures actually went up sharply. Now they pulled back a little bit. Well, they had pulled back. Now they're running again. Most importantly, we've got the pattern that I call the dreaded H. We start to see the H pattern take out, certainly on a very short-term basis, take out the low of the 13th, which was at 42,081. It goes below that. That's the pattern that I call the dreaded H, meaning that you've taken out the left side low in an arch formation, and that's going to be not very good action. I'm anticipating that's kind of what we're looking at for the next week or two. All right, let's go back to what we were looking at before. And the one missing link that's really important is crude oil. Crude oil is down 29 cents right now. That's 73.23 in the continuous contract. Made that peak D we were looking for. Got to the Chapman Wave inside track repellent zone. It hasn't been able to hold above that. Let's try to go above it for 2 weeks, and it's not inside there. And I'm going to be watching this very closely. Look at the monthly chart. Now, this is Technical Friday, so let me talk about this technically. The longer the trend line, certainly on the downside, the greater the chances are that just moving sideways, remember, price moves sideways. Just moving sideways says you're going to take out that trend line. What's really important about a trend line is how, what did we just see? We saw it in the, the crude oil we're looking at right now. So I wanted to look at, gosh, I just said it went it went above the trend line and now it's back in. Anyway, let's just deal with this. You have to see the price move sharply above the trend line resistance and become a support level. You've got to take out each left side high to clear it so that it now is looking at an open sky instead of resistance. So that says crude oil will become very positive if it starts to trade at 78 to 81, anywhere in that range, at any time in the next month or two. It can happen. We'll be watching it very closely. So that's trend lines, right? The other thing about the crude oil is that obviously when you're dealing with Iran, you're dealing with crude oil. So this is going to be very important, how to monitor it, because we've just seen that gold, which is really the proxy for geopolitical uncertainty, has pulled back very sharply, down 45. That's the one I was looking at. Gold went above this inside track repellent zone. That became a propellant zone, but it's no good going there a couple of times and then coming right back in. That means that gold right now is in a consolidation phase, sideways in the weekly chart and the monthly chart. And look at this one. This is on the upside. Look at this long-term trend line. Look at that trend line going all the way back to the low of, I think it must have been January of 2015? No, December of 2015. December of 2015, you got that low, and look where it went. Now this is a price that actually gets smoothed out in terms of number, but the chart pattern remains the same. So it went above this very long-term, 9-year trend line, and we're going to be watching that very closely. Basil Chapman, early edition of the Tiger Technicians Hour, 8:14 a.m. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Hi folks, we're back. This is the early edition of Friday the 20th of my Tiger Technicians Hour. It'll be repeated at 10. There are a couple of things that I'm looking at. I had a question about the 15-minute chart. I'll show you the 10-minute chart of the E-mini. So the question was, a very good question, was that a rogue wave, the sudden spike to the upside? Well, a rogue wave usually occurs when the price is going down for a while, and then there's just one spike to the upside that takes out that previous high long enough for those people that were short saying to themselves, oh, I knew I shouldn't have shorted. It was so good. Why did I even think of shorting? And they cover. And the people who got out saying, oh, man, I knew it was strong. Why did I get out? I got to get back a little bit. And they add some back to the position. And in that very bar that they do it, it traps both the longs and the shorts. Because why? Within a second, it goes right back to where it was, the negative action before, and it's just one bar that does it. When it's a concerted move like this, and it goes to a new recovery high, in this particular instance, in the 10-minute chart, which would be about the same, and I had already called this Chapman phantom peak with two parallel highs for that peak C, which means that you can go to a D, but often, if the technicals are holding well, it'll go even higher. So this is a pattern that I've called, you know how when you got that little icon, the person raising their right hand, like, excuse me, I want to say something. So I called it a right arm extension because the technicals did confirm the rally. It wasn't like this was a one-off that goes there and then it goes right back to being negative. This is different. So you can see that there's running going on. The E-mini is now up 10. And it's so interesting in this. Okay, now I need to talk about some things that are really important right at this very moment. In this moment where you've got Middle East conflagrations, you've got just a lot of uncertainty everywhere. What do you have? You have a Microsoft at an all-time high on Wednesday. And what is it? A round number, 481 round number high with a 470. I need to just check on that. I did that very quickly and I forgot to check it. With a 478 round number open. Well, we're going to be watching this because if this market is about to turn down, it's going to turn down pretty much right now without Microsoft making new highs, and Microsoft will be in the 476 to 473 area by the end of next week. So far, this is very good action. It's only down 24 cents at 480 pre-market. You've got a whole bunch of other things. So I like to look at round numbers. There have been quite a few, but most importantly, let me just go through a couple of, So I had spoken about this the other day. I do want to get to high-grade copper. High-grade copper is holding quite nicely. It's just fractionally up at 4.85. This is a nice holding pattern right here. If we can make a cup formation and copper goes to 4.90 in the next 4 or 5 sessions and holds there, that'll be positive. Right now, it's just holding one, and it's kind of, it's okay. Now, I wanted to show you this. I'd mentioned the FXI, and I drew this pattern in the other day, and I said the FXI, which is the iShares China Large Cap ETF, this is all very important because it's really part of the whole composite. It's the big picture of the macro look at the economies around the world. It is now up 11 cents pre-market at 35.86. But look at this. I drew this in, and I said there's a chance, if I'm correct about this Chapman wave unconventional flat base restart going to the 34s, then we should see a lot of weakness, and we should get to the low 35s within days. Well, we're holding nicely in the 35s. We're not breaking down, but this is a pattern I'm watching very closely. I'll just do this real quickly because I always get asked about the XPEV. XPEV is Zhuang Inc. designs and develops, manufactures smart EVs, made that arch formation, trading down 3 cents pre-market at 1858. And there's that arch formation. And this is a pattern we look at very closely in the Chapman wave methodology. At a peak A or B, there's an arching over. And if it takes out the left side low, first you got the 1686 200 period exponential moving average. But if it takes out decisively this low right here on the week of the 11th of April, 16.13, that's going to say, that's a problem. And this is the EVs. Now look at this. Tesla, on the American side, this is one of the most popular EVs in China. Tesla right now is up 560 at 327. And what's really important about this, it too is making this arch formation at a PE. Let me just show you this because I think it's going to be what are the patterns we're looking at over the next couple of weeks? For me, it's the dreaded H. What is the dreaded H? Now I've got to find this. I said it, so I better find it right here. And we're going to go to pattern right there. I can see it. Can I click on it? Yeah. So, I don't like doing this. I'm going to try to move it over right here. See if it worked. Okay. I look at 3 core patterns: straight up, straight down, cup formation, arch formation, and a mix of 1 and 2 or 1 and 3. 1 and 3 is when it comes down sharply, rallies to a peak A or a B, fails, and takes out that left side low. So that's what I'm saying. This is the arch formation, yes, undreaded H, but an arch formation, almost like a double top, almost like a head and shoulders. And now what happens is come down very sharply and Tesla went to peak A. There's another little A right there, and another little A. And if it starts to take out, right now it's acting very well, but if Tesla takes out, just as a startup, a rollover, takes out 305, wow, that's like 12 or 13 points. That's a big move now. I'm just saying, this is the pattern I'd be looking at. That's going to be a problem. But wait a minute, we can see this all over the show. Let's go to the Dow. The Dow, not at this moment because this is pre-market, and we've got the Wednesday close. There's a little arch formation. There's a peak A. So we've been short since right there. Thursday, intraday, we got short. We're very fortunate that it all worked out. And so just about 200 points off the most recent high of 43,115. And what happens is it arches over. So we haven't fully formed that arch because the YM right now is having a bounce. So that didn't even make a peak. So this is still what is leg B to the downside, right? And we've got a good rally pre-market after being weak. It's now at 41 cents. But as I'm looking, and we are short, as I say, but as I'm looking at this, it's a pattern du jour. It's not just du jour. It's going to be for the week, for the month. If this starts to fail, here's an egg B. It'll be a peak B by the end of the day today. If it doesn't take out the high of 43,000, we're talking about the futures, 43,516, and I'm pretty sure it won't, but you never know. This is the arch formation. But nothing happens until it takes out this low. In the futures, it'll be the week of the 23rd of May with a low of 41,552. That's 1,000 points low. I don't know what's going to do that, but that's what I'm saying. That's the pattern. And the other thing is the 9-period moving average. Today, pre-market, it's just gone pink. It's the first time that it's done that in a while. I'll be right back. Basil Chapman, early edition, Target Conditions Hour, 826, and the Dow Futures up 42.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, Basil Chapman here. This is the early edition Tiger Technicians Hour, 8:30. Let's see if there's any economic news. And let me just show you, here's the futures. Here's the 1 minute chart, peak A, peak B, C, D, and let's see what happens in the next minute or so. So here we go, A, B, oops, why did it jump? B, right there, C, okay, is right there, and there's a D. All right, so it's moving around a little bit. Nothing much happening. It's one of the first times in a long time that we've had an 8:30 report, and there's nothing. I think the Iran news is important at this particular moment. Okay, now we're moving up a little bit, up 11 at 6,045. Nice move. I don't know if we're going to fill in this rectangle formation. I usually go to the candle high right there. If it takes it out, I say, okay, you've proved yourself to show a little bit more strength. Then that resistance level would imply. So now we're going to go to a halfway marker of this inverted Chapman wave Roman candle, green candle, and each one is a new level of support. All right, let's get back to what I wanted to talk about here. Uranium, RUNM, Sprott Uranium Miners ETF, had a very nice move from the 30 level to where we are right now at 47, up 3 cents. I've got this as a peak C in the daily, leg B in the weekly. We just the position that we often have over the years is UEC. This is UEC, Uranium Corporation, Energy Corporation, and we don't have it now. We just got stopped out over there, and then it moved up sharply, but it's very choppy. And this choppiness is suggesting to me that there is a bias, higher highs and higher lows. That's been working so far, and it's pushed away from the 200 period moving averages as UEC. But let me just go to URNM, because this is the composite. This is the uranium ETF, and that's a much better proxy because it's got everything else. And it says the monthly chart, still pink. The 9-period moving average has been crossed positive. The MACD is still weak. Stochastic's weak. On-balance volume is very good. Price is very good. So that means there has to be some catch-up in the technicals. Well, if you look at the weekly technicals are fabulous, 92% in the stochastic. On-balance volumes are rallying. MACD is very strong with a rising histogram. That's those vertical lines. That's the distance between those two lines there, two moving averages. And here we are, leg B with a 9-period moving average strong and way above the 200. So this, just as the chart pattern, it's not telling you what's going to happen next. It's telling you what happened up until now. It's been very strong. There's a chance it pops a little bit to maybe towards 48 and then takes a breather as there's this pause going on with Iran. But I think this is in play, the way it's acting right now. So I would put it this way, that at 46 to 47 at this particular point, if there's a pullback towards the 43 to 41 area, that's probably going to be the next level that you want to be looking at. If you haven't got in, you would like to get in, that's something that I'd be looking at that moment to say, okay, what's happening geopolitically? Is this viable on a chart pattern? Does that confirm what you're thinking? All right, next thing I want to look at here is, look at this. Caterpillar has gone to a peak D with a 364.61 high, not the all-time high, that's over in the 418 area, way back in 2024, but it had a 361 open. So I'm watching this together with, and pre-market, it's at 361.21. So I'm watching this to say, okay, I'm getting a little bit top here, all these peak Ds and many round numbers. I'm watching it closely. Look at GE. No round number, but it has gone to 257.47 and it's on its way down. And on Wednesday, the 9-period moving average crossed negative. So I'm really very close to putting in a down arrow for a sell signal. I have to wait for the close today, but there's a good chance. Look at this single leg A to the upside here. That just says that at some point, GE will come back strongly, but at this moment, it's got the whole thing with Boeing, with the engine there. See where Boeing is. GE is no more since the 1920s. It was in the Dow. It's not been in the Dow for a while now, but Boeing is, and Boeing's up 67 cents in this dreaded H pattern after a peak D high. I was looking for round numbers. There were a couple before it made the high. 212 open. Now that's it on the 3rd of June. And then it runs up to peak D at 218.80, and now it's at 198. So I'm watching this very closely. It's only a leg B, a peak B in the weekly chart. Next thing I want to look at, yes, I mentioned Microsoft. Microsoft went to that peak G/C. Remember I said that there's a very good chance I'm going to be calling this a leg G/C. We're still long a part position there from 338. It hit 481 round number high, 470 open, and now it's trading at 480. So it is above that round number open, but below the round number close. If it goes above 481, that negates that as some kind of topping action. Next question I had was, I hadn't looked at the transports for a little while. Where are the transports? Well, on Wednesday, the 9-period moving average flipped negative. It's had that dreaded H pattern, which was, it went under the left side low, and then ran very sharply high, and then failed. So this is going to be something to monitor, because if the transportation iShares, transportation average, ETF, closes under 63, that's just going to say, be careful, because now we have a very important component of the general market, that it's the transports acting poorly. Next question I wanted to get to was, I wrote it down. I mentioned ZS in my newsletter the other day. Someone said, how's that acting? Because it was acting very well. ZS is a Z-scaler. It went to a peak D, and it's holding. A lot of these charts have done this pattern, gone sideways in a very narrow range. So this had a high of 309.19. ZS is the symbol on the 16th of June. Makes a low high the next day and a low, and then rallies on Wednesday to 308.66 high. So this is going to be very important. Right now, it's only down 10 cents pre-market at 305.31. So the stocks that have done very well, let's look at Robinhood. Robinhood, which we're still in a small position from the 16s, so we've had some really nice trades on the way up, all the way to the most recent highs. Look, here it is at 78.31, down 4 cents in leg E. So there are stocks that have done well and are still holding well, and even at this very moment are testing recent highs. I'll be right back. Basil Chapman, Technicians Hour. Let's see what the futures are. The YM is trading up 118.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so we're back and I wanted to show you something, and this is what I was talking about a moment ago. The reason why I changed the color on that peak seat is to say that it was to help me to assess. I like to always know that we're getting to a peak D, and I've got the options. It gives me a chance of either ameliorating any mistake that I could maybe take something off if I was long, or I could be prepared that we've gotten to a D. But very often with these phantom peaks, you actually do get to a real D. That's the reason why I do that. And then what I do is I move the D over like this right here, as something I was acknowledging as a potential, and I put this in and I keep it there to say, hey, you use this, and look, it still shows strength. So now I've got that D. A D in the 10-minute chart. It's now an F in the 5-minute chart. I could even have an instant restart. I'm sorry. There's an instant restart right here. I didn't show you. I didn't put that in. There it is, yellow, right there. Because within 3 bars, it made a new higher high above D. That becomes E/A, F/B, but I don't have to put those letters in. I just keep them in my mind. And the 1-minute chart has already been walking the 9-period moving average, and it's strong. And there again, I can have an alternate count, but I don't have to do anything because the 9 is so strong. When it starts to flip to pink, then I say, oh, be careful. So I just want you to show you this is real live action. So the only way you can explain it is when it moves at that very moment in real time. And that's exactly what we've got. So now the YM, this is the Dow futures up 109. Now this is all based, it shows you how important the market is considering some kind of peace in the Middle East, somewhere, anywhere. And at this particular point, of course, it's really important because Iran has been just gnawing at the world by saying we're not doing anything, we haven't got anything with the nuclear, and then everything turns out that the enrichment part of it is progressing a lot quicker than many people thought it would. All right, so with that said, I wanted to do a couple of things here because this is the early editions. We don't have real time on the actual prices of the stocks, just pre-market action. So I had a question. Yeah, you didn't get to the GDX. Sorry, I did not get to the GDX. So the GDX, I've got this as a peak G. There could be an alternate count. I'm quite happy saying, it's had a fabulous move. There is some talk about, at least as long as there's some talk about peace in the geopolitical arena, that gold price is going to be pulling back some, and the GDX is down 45 cents at 52.55. We are still long that physical gold. This is the gold. Here we go, PHYS, which is the Sprott physical gold units, done really well. But we've been long since way down here, And we've taken something off. Not as much as others, but have taken a little bit off. I might be taking a little bit more off, not yet, but we'll see. But at this particular point, it's done well. Silver, funnily enough, had actually exceeded the action of gold as a catch-up. And today it's down quite sharply. Between yesterday and today, it's down 92 cents at 35.98. This is the continuous silver contract. SILJ was the question I had. Could you just go back to covering that? Yeah, that made a peak F, and now it's stalled. And what I always do with this is I say, okay, there's a large rectangle. You went under the gap low. That's important. If this is going to fail, this is a junior silver miners ETF. That's a peak A. That's a peak B. I call it gray A and gray B because it's under the previous major high. If the juniors take out 1473, they're at 1473 right now, pre-market, down 15. That becomes the dreaded H pattern. And what do? I don't know if I'll have time to make this out. I just imagine that this is gray. It's not blue, but gray. All right, I'm going to make it gray. Gray. Takes a second. There it is, gray. And why is it gray? Because I haven't got a new buy signal yet. It is arching over, and there's a chance it's going to make the dreaded H pattern, meaning it takes out decisively the left side low, and as I said, 1470. And if it does that, then what we're looking at is the 14-period moving average of 1456 becomes the next key support level. All right, with that said, so we did that. Question came in about TGB, Taseko Mines. It's trading at $3, done really well. So high-grade copper is holding pretty nicely. Here, it's down 0.003. But you can see that these green bars, it says that there's really good support, but if it takes out 4.70, that changes things. That's the dreaded H pattern again. So TGB, what I mentioned the other day, the spectacular move that it had, going from the mid-twos into the threes, says that you should really take something off. Do you want to put something back? I'd say I'd have to wait. I'd have to wait because the pattern that's forming here says, yes, it's either a cup formation. This is Taseko Mines. It's either a cup formation right here, or it's a rectangle formation. And either one says how it deals with the previous high means that time is of importance because you want to break that previous high of $3, and I'll tell you exactly what it is right now. There it is, Taseko Mines, $3.14. You want to take that out decisively, and it has to be soon. Well, it's taking a little too much time. And that says you're kind of stuck in a range between the 314 high and so far the low of the 13th of June, which was 284. And if it goes to 282, that says, for now, Taseko Mines is kind of done, needs a little bit of a rest. It's only a leg B, probably a peak B today. In the weekly chart, and that says it should still go higher. 315 was the major high back in 2024 before it went all the way down to the 160s, and now it's come all the way back, and the high was 315, did I say? 314. So it's 1 penny underneath that. It's like a little bit of a double top. We're watching very closely. Hope that helps you. TGB, if it hits 320 anytime next week, that is outstanding action. That actually starts at leg C in the weekly chart. Next question I had was, I did that. Honeywell. HON. Honeywell. Made a peak E back around about the 5th or so of June, and now it's trading at 221.87. So from the 229s, it's gone down to 221. Not a big deal, but look, arching over in an H pattern, with a little dreaded H pattern as well. The 9-period moving average Wednesday flipped to pink. That says Honeywell is in a very short-term consolidation, but it needs to hold 219. Closes under 219 in the next few days. It says, it's going to take a little bit longer as a consolidation. But so far, outstanding action Honeywell, HON symbol 221.87 at this particular point. I'll be right back. Basil Chapman, early edition of the Tiger Technicians Hour. Check out Opening Call Daily Newsletter.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
I suppose last segment, let me just quickly do this. This is now at 8:54 a.m. We're looking at the Agnico Eagle. AEM is the symbol, trading down 96 at 121.69. On the 21st of April, it hit 126.76. Plunges down to the 104s, rallies all the way back to what? 126.65. Little double top there, so don't be surprised if Agnico Eagle has a little bit of a breather here. It needs to hold it's 121, needs to hold 118. I did not, for some reason, I keep forgetting this. Bitcoin is up 2150 at 106,115. It's in this range here, making the H pattern, but so far it's held very nicely. The longer it holds, the better it is. But it also made this double top at 112,600 back in December, and it plunges down to the 75,000 level, now back to 113,000. So it's trading very nicely, but it's sort of stuck in a sideways range. So let me just do this before we wrap up. We're going to be going to Tommy O'Brien will be doing, I believe, the next hour. I can't remember. Is today the day that Larry does his show, his early morning live show? I'm not sure. But what we're looking at here is, let me just give you this. If the Dow, this is the closing price at 42,171. If the Dow is able to hold a gain of 20 points or more after 1:30 this afternoon, that's really good action. If it suddenly turns down and it flips to now only a 20-point gain, and then it flips to a minus 20 at that time, it says, just kind of starting to acknowledge some of the technical weaknesses are just beginning to show up. That's what I'm anticipating over the next week or two, that we're going to be testing the left side of the pattern that we're looking at over the next week or so. Is this H pattern, the dreaded H pattern, how we take out or hold the left side low, and the 9-period moving average. So that's really important. So with that said, have a wonderful weekend and stay tuned for great programming here at TFNN. Check out my opening call, my daily newsletter, and we'll see what happens, because it's going to be a very important couple of days coming up, going into Tuesday of next week, technically. Have a wonderful day.
This year has already been a wild ride for the market. We started off heavily in the